Did you know that gold prices are on the threshold of achieving a record high of $3,000 per troy ounce? Did you know that the Reserve Bank of India was the largest buyer of gold last year? Hello and welcome to another edition of Capital Calculus. I am your host, Anil Padmanabhan. In recent months, gold prices have witnessed an unprecedented surge. In fact, they are poised now to claim a lifetime high of $3,000 per troy ounce. Remember, gold is always considered as a safe haven, a bet against uncertainty, whether it accrues through inflation, war, conflict, or disasters. So, what then does this surge in gold prices tell us about the world economy? To answer this and more, I spoke to Renisha Chainani. She is the head of research at Augmont Gold. I began by asking Renisha as to why gold prices have surged in the last few months.
Yes, gold prices went up last year by almost 25% from $2,070 to $2,800 in first 10 months of 2024 because there were a lot of geopolitical tensions between Russia, Ukraine, and then Israel, Hamas. Then we saw in first week of November, prices fell by almost 9 to 10% because there was election in US. And then after it was decided that Donald Trump would become the president, we saw that prices stabilizing and recovering a bit. But with the start of 2025, we have seen that gold prices have again started it ascendant, and it is almost up 12% as we speak. It has been trading above $29.50. And it is one way rally which we have seen in 2025, and it is all because of the uncertainty that is expected that tariffs would bring, and there is a lot of gold that is dislocated from one place to another, and there are a lot of supply chain issues, and there are also concerns that inflation would blow up when this actual tariff would be imposed, and actually the numbers will come. So there's a lot of uncertainty, and gold has almost inverse proportion with the uncertainty. As the uncertainty rises, we see that gold prices also going up. So there's a lot of uncertainty that is pushing up the prices.
Renisha, you mentioned supply side challenges. What exactly are these?
Yeah, so supply side disruptions we have seen, not the exact supply side disruptions, but yes, there is a lot of gold that is, dislocated in the month of January from other countries to US, like from London warehouses to Chicago Mercantile Exchange, CME warehouses, because people were afraid that if tariffs are imposed, they would have to pay the tariffs. So almost more than 400 tons of gold has been dislocated from London to CME. So this is creating a lot of supply chain issues. Like we have somewhat kind of what do we say, a shortage in London, and we have surplus in US. So that is why we have seen that premiums also going up in gold in a physical market. Like premiums were around you can say $4 to $5. Now that has gone up to almost $15 to $20. So people are willing to pay the premium because there is shortage in London.
So, Renisha, what you're saying is that there is a structural factor which is impacting gold prices, which is summed up in one word: uncertainty, due to a host of reasons. On top of that, you have this relocation of gold, stock away from London to Chicago, which is creating this impetus. So, looking ahead, do you see gold prices, given this trend, piercing the $3,000 mark per troy ounce?
So over the past 3 years, gold prices have almost doubled. It was, $1,600 3 years back, and now it is almost $3,000. We are just 2% away from $3,000. So yes, if prices could touch that level, I think yes, very soon. In fact, in this month, I'm expecting that $3,000 level milestone could be achieved, because continuously there are geopolitical tensions. There are other factors that are also supporting prices rather than only certainty. Like there are geopolitical tensions, then there are inflation fears, then we have central bank accommodative policy around the world. So it seems like due to such macroeconomic conditions and geopolitical developments, I think we are very near to that level, and I think that level would be breached in this month.
So, I've been reading analyst reports, including yours. All of you say this $3,000 mark is some kind of psychological point. So, what happens if it crosses this psychological mark? Is this the start of a new trend, or it is just going to be a one-off and it'll, thereafter fall back?
No, I don't think so. There would be a start of a new trend, because $3,000 is, a target for many of the analysts for 2025. It is considered a target which many analysts are expecting that prices would achieve in 2025. So if that is triggered, I think we would see somewhat follow back buying, and prices could, ascend almost $50 or $100 more. But yes, it would trigger a selling wave also, because there are a lot of investors who have been on the buy positions in the future market, in option markets. And as it seems like if these levels are achieved, they would certainly, short-term traders would certainly book profits. And I think we could see a wave of selling that could extend and bring prices again back to $2,700 or $2,800. I think that would be again a consolidation phase that would be seen. Sustaining about $3,000, I don't think so. It's a possible scenario as of now that is being looked at. So all the positive outcomes or whatever is being uncertainties there in the prices, I think that is being discounted in the prices. And once this level will achieve, I think we'll see a bout of profit booking.
See, there's some good news in the offing, because I was listening to President Trump's press conference today morning, our time. He was saying that his legacy is one of being a peace president, anti-war. And he shared details about his conversation with President Putin, and he was confident that the Russia-Ukraine war should end in the near future. So that should help in dampening this gold price trend, right? Because there'll be a certain element of less uncertainty, as it were.
Yes, you're very right that Donald Trump doesn't want these Cold Wars to be continued between Russia, Ukraine. And from the very first day, he has been on this view that he wants to give a ceasefire deal to this war that is going on. So I think, yes, this would dampen the gold demand as a safe haven asset to a certain extent. And that's what I am expecting. Like once this $3,000 level target is achieved, all this news would come in. That would be a fundamental news that would trigger a sell-off in the prices. And also technically, once it has been in the overbought zone, this sell-off is due. I think prices have been extended too much, too far. And once $3,000 is achieved, this overbought signal is a point where we are expecting that prices we could see some retracement and profit booking.
Right. So Renisha, you mentioned gold is normally a safe haven. So the economics that we learned in college taught us that it was a hedge against inflation. So this current bout of surge in prices, Is this for conventional reasons like a hedge against inflation or triggered by other factors?
Yes, gold has been considered as an inflation hedge, but there are other demand factors also. I mean, an array of factors that is impacting the demand. While rising inflation is a key driver, there are other factors like geopolitical tensions, monetary policy uncertainty, then weakening of US dollar. So all this is pushing investors towards gold as a safe haven. Additionally, we have various innovations like digital gold and ETFs in the market. So that is also, becoming more accessible in the market, and they are the liquid options. So people are the traditional buyers are going for these options. So we have more accessibility of investing in gold nowadays. So whenever people think that there is uncertainty, they want to hedge their position, whether it's an inflation hedge or an uncertainty hedge, they have various options available now that could be, invested. Gold could be invested in very fractional amount. So this is what is driving the investment demand, I suppose.
So, Renisha, you mentioned traditional buyers. India and China are considered to be the biggest gold importers in the world, especially for retail use. So, have you seen any change in their pattern of demand given this huge surge in prices that we have witnessed in the last 1 year?
Yes, certainly India has seen I mean, change in demand factors. Uh, Traditional investors used to invest basically in physical gold bars and coins, but gradually we are seeing that the jewelry demand is coming down because of high prices, but the investment demand is continuously rising. Even if you look at the WGC report of 2024, it says that jewelry demand has come down in India and all over the world, and investment demand has gone up. So people are more interested in buying gold as an investment asset. So they are investing in physical bars and coins, and digital investors who are the millennials, Gen Z investors. They are looking for various other options like digital gold and ETFs. So we are seeing that there is a lot of surge in these two options because these two options are more accessible, and they allow a lot of ease of investing. So that is what is being seen as a trend in change in trend in gold investment demand.
Oh, very interesting. So, what you're saying is the demand for gold now has a new mix where investment is a significant proportion, where you don't have to
Yep.
actually hold the actual asset and you can trade in it like digital gold or ETFs. So, what is the proportion? And when did you see the shift coming in? When did it start occurring or taking place?
So this shift happened, I think, 4 or 5 years back when there was COVID. During that time, when most of the jewelers were closed for 2 3 months, and if people and gold prices were then too also rising, and people understood that if they want to invest in gold during these times, they have to do it digitally. So during that time, 2020, we saw this shift happening, where there was a lot of demand coming in for digital gold and ETFs. So if you talk about the proportion, it is still very less. So I think still investment in this digital assets constitute only 5 to 7%, because still it's a new area, and you know gold investment has been a 5,000 years old thing. So it will take some time for investors to understand this. And millennials and Gen Z, as I said, uh, they are very adaptive to new technology, so they are doing it. But other generations, it will take some time. But gradually, we are seeing a lot of shift in this two options. If you look at ETFs in last 5 years, ETF holdings in India have doubled. Even for digital gold, we have seen that there is 3x to 4x jump in the holdings of digital gold. So continuously, these two investment options are gaining a lot of attraction.
So, what is digital gold then?
So digital gold is investing in gold in a very small fraction. It could be as low as 10 rupees, 100 rupees, 500 rupees, whatever you want. You want to invest in a lump sum, or you can invest through SIP, and you can invest 24 by 7. These apps and platforms are open 24 by 7. You don't have to wait to the morning to buy gold. At midnight also you can buy gold. And at backend, these custodians like Augmont, uh, they whatever amount you buy, accumulate this amount of gold in their custody. And gradually, this has also been, there are various independent trustees who do the safeguarding and securing this. So whatever you are buying, it is 100% safe and secured. You don't have to pay any extra charges for it. And whenever you want to liquidate this, that amount, you can liquidate it in the form of cash, or you can buy gold against it.
I also want to draw your attention to another trend, which is central bank purchases, including the Reserve Bank of India, has been buying up gold, and our gold reserves have shot up pretty sharply in the last, say, 5 years. Are they also contributing to this price surge, and why are these central banks buying up gold?
Yes, you're right that central banks have been very active buyers of gold since last 2 years, and not since last 3 years. In fact, they have bought more than 1,000 tons of gold every year. Even last year, there were 1,050 tons of gold that was bought. So I think they have been buying gold because they want to diversify their reserves. They are decreasing the dollar amount, dollar reserves, and putting more and more money into gold. So this trend shift has happened 3 years back when there was Russia-Ukraine war, and there were various sanctions that were placed on Russia, and Russia was not allowed to withdraw its other reserves. So gold is serving as a safe haven during that time also. So it served as a reserve which Russia could utilize. So emerging countries are of a view that if there is a war, so they don't want that their reserves should be blocked, which are in dollars. So more and more central banks are moving away from dollar, and they are shifting their money to gold. In fact, RBI has been also buying 70 to 80 tons of gold every year. Last year, they bought around 75 tons. So gradually, they have increased their gold reserves from 6% to now it is 9%. So even they want more and more gold in their reserves.
And interestingly, they are bringing the gold back to India.
Yes, true. So we have seen that they don't want to pay the charges, storage charges, which are there, at London warehouse or other warehouses. So they are bringing it back to India so that the infrastructure has, there's a lot of development in the infrastructure in India. So they don't want to pay that storage cost. That is a concern. That's why they are bringing it back to India.
Okay, finally, Renisha, I want to ask you, what is your forecast for gold prices in the next 6 months? Keep in mind that in 6 months, our festival season kicks in, where retailers, consumers, flock the market to buy gold, jewelry, or gold. So, what is your forecast?
Yeah, so festival season would begin from August, I suppose. And before that, if you say, I think there is Akshay Tritiya in April, May. So this is one of the factor that will continuously bring demand to the prices. And then we have marriage season also in May, June, in April, May, June. So yes, we'll see in India demand, which is somewhat lackluster now, would pick up from the month of April. But Indian demand supply doesn't impact the prices much as do the international prices and international demand supply. So if you look at international supply demand, there are a lot of factors that are impacting the prices now. So we have persistent inflation. US is expected to cut the interest rates by twice. In fact, all the central banks around the world are expected to continue their monetary easing this year. So this is a positive factor for gold this year. Then we have tariff certainty, and then we have a strong central bank demand. We have strong investment demand. So I think next 6 months would could be divided into two parts. First 3 months we would see somewhat a rise in the prices. I am expecting that gold prices could go up as high as $3,050 or $3,100. So they would be topping out around those levels. In Indian terms, it would be roughly around 90,000. And then I see some profit booking, a wave of profit booking that could come in, a retracement that could come in, and we could see that should come in the second quarter of 2025, where somewhat demand. Demand would be supported, but yes, a wave of profit booking is again expected, and that would bring prices again back to 80,000 levels. So those who are waiting that we have missed this rally can wait for 2-3 months more. We are expected that prices could go down by 80,000 rupees per 10 gram. So that level would be a good opportunity for those who want to buy gold for long term, because next 2-3 years is again bullish. It has given 12% CAGR returns from the last 25 years, and it is expected to do so again in future also.
According to Renisha, gold prices will top $3,000 per troy ounce in the next few weeks or months. Thereafter, it may dip but again reclaim these levels. In other words, uncertainty in the global economy is unlikely to recede in the next 2 years. A lot depends on the man who's just taken charge in the White House, Donald Trump. And we all know that his calling card is uncertainty. Thank you for watching. Don't forget to subscribe to StratNewsGlobal.Tech on YouTube. Hit the bell icon so that you don't miss any updates. And please, to share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.